Google celebrates its 18th anniversary today, Tuesday 27th of September, with a fancy Google Doodle. But in fact, it's celebrated its anniversary on different dates in September in previous years. But hey, let's go with today as an excuse on how to trade the stock. But before, just a quick reminder that this is now one of the world's wealthiest companies. And whichever date you celebrate, it's only just coming of age. Larry Page and Sergey Brin met at Stanford during their PhD programs and formed the business in September 1998, calling it after a Google, the number 1 followed by 100 noughts. Since launching Google, initially calling it Backrub, as PhD students at Stanford University in California, the company has grown at an alarming rate to encompass a range of business offshoots ranging from online advertising and a global mapping service to maps to driverless cars and robotics. Google has also been acquiring businesses at an alarming rate, on average at more than one company a week since 2010, including Android, Nest Labs and YouTube, which is itself the world's second largest search engine on the planet. Last year, Brin and Page created Alphabet, which is an umbrella company which has Google as its biggest component part. Sundar Pichai was appointed CEO. Now, Chris Beauchamp joins us now with analysis of the stock price chart. Before we take a look at current trading patterns, this is a stock that's come a long way since its listing in 2004.
Indeed, a 1,300% return since 2004, the mother of all hindsight trades. It's comfortably outperforming, of course, the Dow and the Nasdaq. A bit of a blip, of course, 2007, 2008, but since then it's recovered and we now stand at over $800 a share as per the current share price. If you look at this as the quarterly chart, you can see that that is essentially an uptrend that has barely stopped at all over the last 12 years. If we turn our attention now to the daily chart to see where we are actually at the moment as we head into this key anniversary, you've got this interesting pattern on the share price where 806, maybe up to 817, that region has been where the share price has run out of steam since November of last year, essentially the all-time highs. And so we're still waiting for a firm break above this level. And then in terms of looking at where support comes from, we've got that strong rising trend line there coming through, tested in July, and then another bounce. So we're definitely watching for any weakness down towards maybe the $700 mark. Remember, of course, it is a big share price, so it can move around quite a lot.
This is quite often a question that comes up in client seminars, doesn't it? When you've got a record high, how do you measure further increases? And here we are now at this record high, applying technical analysis tools and working out where the stock goes from here. I mean, as you say, it's not a straight line, but it's a pretty good indicator over a period as to where it's going to go. But can we be reliant on that?
I think it's always an interesting one because it does mean you have a lack of obviously key resistance levels above from where we are now. We're looking at perhaps ideas of ascending resistance. If we were to zoom out further, you could probably make a case for saying that actually we're watching the very top of those candles from October of last year. So that's probably really what you're looking at, up towards about $850 a share. That's certainly the all-time high intraday for that share price. In terms of the downward movement, you're just using that rising trend line as a key marker, really. It goes all the way back into 2014, so definitely the one to keep an eye on, I think, for any weakness. We're looking at a very strong period of equity markets into the last quarter of the year, and it wouldn't be surprising to see Google be a part of that.